The European Central Bank has just lowered interest rates and is actively working to turn the euro into a soft currency. The head of the European Central Bank is making a shocking statement here that we absolutely need to take a look at, because what is being said is extremely explosive. In addition, there are now studies suggesting that the cost for the digital euro will be much higher than anyone expected, and the ECB is being caught off guard. On top of that, we have major statements from the former PayPal CEO and the Uber CEO, who are both raving about Bitcoin. And we have a massive leak indicating that Morgan Stanley, Bank of America, UBS, and Wells Fargo are going to accept Bitcoin. How crazy is that? But before we dive in, smash the like button below so Bitcoin can really take off now. Of course, Bitcoin is having a really tough time at the moment. I mean, the ECB's interest rate cuts are actually positive for Bitcoin, but everything else that's happening around it is making things really difficult for Bitcoin. We'll get to the ECB in a moment and take a look at everything that's happened, as well as the statements Christine Lagarde is making and much more. But first, we actually have Uber, who are now considering offering Bitcoin as a payment option in their app, and that would be absolutely amazing. I use it from time to time here in El Salvador. Super clever. It also works really well in other countries here in South America. Not so much in Germany, but in most countries around the world, Uber, Bolt, and similar apps are really convenient, and they're definitely great catalysts for offering Bitcoin payments. Now we have the Uber CEO telling Bloomberg, Bitcoin is a recognized way to store value. It's a proven store of value, and the company has stated that it's exploring the possibility of exacting crypto payments. So they're trying to further explore Bitcoin and crypto payments here, just looking into whether it's actually possible to do this. And Bitcoin could really be going more and more mainstream now, even though, as I said, you really have to separate the background developments from what the current Bitcoin price is doing, because the background developments could hardly be more bullish. We're seeing interest rate cuts. In the US, interest rate cuts will also come sooner or later, all over the world. We're seeing massive adoption here. The only thing that's still missing is for us to have the Valhalla cannon here. That's why it's important that you hit like and subscribe now. Take just 2 seconds and hit the subscribe button if you haven't subscribed yet. We have more big news, like here from the former PayPal CEO or president, who explains why every financial asset might eventually be settled over Bitcoin. Bitcoin is the only neutral, decentralized network, and that's why, sooner or later, a whole lot of things will be settled in Bitcoin. So, what that means is, as a settlement network, it doesn't mean that every transaction is done in Bitcoin, but at least the big things are settled back and forth here. With PayPal, it's similar. They actually have an internal, centralized ledger, a central accounting book, where things are just moved around within that central ledger. But at some point, of course, you have to do the final settlement, and this final settlement could then happen with Bitcoin. And now we have a statement from BlackRock CEO Larry Fink, who says, hey, the US economy is facing another round of inflation. It would be better to have Bitcoin now. So, the US economy will definitely shift into a wave of inflation. Now, it's really interesting to see what the ECB is doing, because we're seeing that the ECB is actually lowering interest rates. We can see here that the ECB has just lowered the key interest rate by 25 basis points to 2%. This is their 8th consecutive rate cut, or yes, the 8th rate cut. With this, interest rates in Europe are at their lowest levels since 2023. And Donald Trump also keeps referencing the EU and the ECB here, saying, hey, over in the EU, they're lowering interest rates and so on. What's going on here with us, Jerome Powell? We need to lower interest rates here in the US as well. We finally need to do something here too. And let's listen in briefly to Christine Lagarde's statements. Here, the European Central Bank officially posts, we are ready to adjust all our instruments within the scope of our mandate to ensure that inflation stabilizes sustainably at our medium-term target level, says President Lagarde when asked whether the fight against inflation has been won. So, I'm not exactly sure how to interpret that. But in any case, when it comes to interest rates, if you lower them, then obviously you're not really trying to get inflation under control, but rather you're looking to potentially stimulate the markets more. When you lower interest rates, that actually means that inflation is more likely to go up rather than down. That's why it's actually counterintuitive here, because in the long run, you would actually need to get inflation under control, since in my opinion, there are long-term drivers and risks of inflation. But of course, it could also mean that they have all the tools at their disposal, so they could, for example, stabilize the economy again by doing things like QE and similar measures. So, she's talking here about stabilizing inflation, but it's also about stabilizing the economy, even if that's not officially part of the mandate. But the ECB does that all the time now anyway, and I think that's the direction this is heading. I think they're saying A, but they actually mean B. But let's quickly listen to what Christine Lagarde has to say about this.
Yeah, victory laps are always nice, but there's always another battle. So, as I said, I think that with today's cut and the current level of interest rates, number one, I think we are getting to the end of a monetary policy cycle that was responding to compounded shocks, including COVID, including the war in Ukraine, the illegitimate war in Ukraine, and the energy crisis.
So what she's saying here is that we're reaching the end of the current monetary cycle, and by that she simply means that there were external shocks, the war in Ukraine, energy shortages, and so on, that led to inflation, and now they need to get that under control, including the effects of COVID. What's interesting is that, in part, the inflation was actually generated by themselves, through COVID, through the stimulus packages that were pumped into the market. But of course, they always say it was the external shocks and so on. Yeah, then they raised interest rates, and that helped get inflation a bit more under control. Now, to be honest, things are actually looking pretty good here. They're not that far from their target now, although the target itself is something that should be questioned. But what's really wild is that when one monetary cycle ends, the next monetary cycle begins. And the next monetary cycle, in my opinion, is really the one where they just let go of all the reins. For example, if there are any dam breaks, if there are any leaks somewhere, if there are any crises, and so on. And when the really extreme money printers have to be fired up again, when QE has to come back, or when zero interest rates and things like that are back in play. I mean, she says they have all the potential monetary tools up their sleeve. She's also said several times that they have all kinds of tools at their disposal and could use them sooner or later. If you read a little bit between the lines, there's already a lot that just doesn't add up with everything that's going on. The whole digital euro topic is still on the table as well. There's also a new study saying, high costs expected for the introduction of the digital euro. And there's an article about this. And if we take a look here, the article says, extrapolated to the entire Eurozone, total costs could range between 18 and 30 billion euros, depending on the scenario. The PwC study on the costs of a digital euro was commissioned by the 3 European banking associations. So the costs are definitely much higher than what was originally expected for the digital euro. That means taxpayers are paying money for a system that will later enslave you, where you could potentially introduce things similar to a credit money system. That doesn't mean it will happen like that right from the start, but it could gradually develop into something like that in the long run. But on the other hand, we have some very, very bullish news. New banks, new big players that are now ready to onboard Bitcoin. We also had JP Morgan, who are really strongly against Bitcoin, but have now changed their stance a bit. They're even offering Bitcoin credit products now. So, Bitcoin collateral lending, or rather, not lending, but loans backed by Bitcoin collateral, that's more accurate. And of course, they're also offering Bitcoin buying and selling and things like that. JP Morgan, who are always shooting down Bitcoin. And now we actually have a $50 billion hedge fund, Cal Amos, who said something really astonishing on CNBC about why the biggest players and the largest banks in the world have now started paying attention to Bitcoin and will soon adopt Bitcoin.
At first, Mackenzie, like a year ago, none of the banks want to even talk about it. A lot of our success is putting our products on the platforms of Morgan Stanley, of Bank of America, Merrill Lynch, of Wells Fargo, UBS, that kind of thing. But they've been reluctant to do anything Bitcoin related up until now. Now they're all starting to entertain it, and little by little, they're gonna accept it. So once we can get it onto all these platforms, we're gonna really start to see a huge spike in interest.
So we're going to see a really big shift in interest here, with a lot of people starting to pay attention to Bitcoin through all these platforms. For example, Morgan Stanley, Bank of America, UBS, Wells Fargo. He says they're all going to accept Bitcoin. And what happens then? A huge number of people will suddenly have access to Bitcoin overnight, through their brokers, through their banks, where they've already been managing their regular portfolios. Even wealth managers or investment advisors from these banks will start pitching Bitcoin. And he simply says that this would lead to interest in Bitcoin rising again, massively rising. Of course, it's also possible that these players themselves will invest in Bitcoin. I know that UBS has already made positive statements about Bitcoin several times. Wells Fargo too, I think. I'm not completely sure about the others. The hedge fund manager who was interviewed here actually commented below as well. As an asset manager, not a hedge fund, who believes in Bitcoin. Cal Amos isn't a hedge fund here. They're probably asset managers after all. Cal Amos is involved here, working on Bitcoin together with traditional platforms to make Bitcoin more accessible to investors. Even though we're seeing great progress, there's still a lot left to do. So of course, there's still a very long way to go before Bitcoin becomes mainstream. But I always tell you this. For example, if Apple were to onboard its users to Bitcoin, if Uber did it, if big chains did it, if major asset managers did it, if banks did it, if brokers did it, and so on. Those are simply leverage effects. As an individual, you simply can't achieve that. Of course, you could go door to door and ring the bell. Hey, do you want to buy Bitcoin? Hey, do you want to buy Bitcoin? But obviously, that's a very lengthy process. And this is so much more important. And the crazy thing is also the image factor. For example, Morgan Stanley, Bank of America, UBS, and so on, go into Bitcoin just as massively as BlackRock has. I mean, then fewer and fewer people here will have reservations, because a lot of people do have reservations when they look around and see, for example, JP Morgan, who are actively speaking out against Bitcoin. There's a Trump who rails against Bitcoin, but that's all settled down now. Now Bitcoin is no longer being attacked. Now Trump is no longer railing against Bitcoin. JP Morgan is no longer speaking out against Bitcoin either. And if all the big banks, like Morgan Stanley and so on, if they all start supporting Bitcoin too, just like BlackRock, like Larry Fink and so on, and even realize there's a lot of money to be made there, I mean, then that's obviously an incredible catalyst. One that really can't be praised highly enough here. So with that in mind, if you want to get started now, if you still want to buy Bitcoin, if you don't want to miss out on what's coming, the massive shift that's ahead of us, I'll put a link below to 21 Bitcoin, where you can buy Bitcoin easily, securely, and simply. Definitely check it out, download the app, enter the code Bitcoin Hotel, and save up to 20% on fees when buying Bitcoin. Anyone can do it. It's super easy. Set up a savings plan, enjoy it, check your wallet in 10 years, and then celebrate. And we'll see each other again. See you then. Peace out.